We have been saying for many months that Europe is underperforming the US, and that was a dog. And suddenly, in the last 2 days after the Italian referendum, Europe wakes up.
So good morning, Bruno.
Good morning, Jessica.
So we're starting today with oil charts. So can you tell us why this is the focus this morning?
Yes, as you see, the oil has been in a trending range between 51 and 42 for almost 6 months. And for a long time, we were expecting it to break 52. Now it has just risen quickly from 42 to 52 with a lot of momentum. And so it's probably going to go towards 60 in the coming weeks.
And can you talk us through what's been the impact on the US energy sector?
Of course, rising oil is positive for the US energy sector, and we see that not only the relative strength is rising, but the oil sector already anticipated this move, if you wish, by breaking up already 3 weeks ago, and the momentum is still well rising. So we can expect the energy sector to continue to outperform the S&P 500 and push the S&P upwards as well.
And another rise in the long term has been US interest rates. So is this a problem in the equity sector?
Well, let's first look at the weekly charts. You are very right. Big rise we saw in November. Remember, in June we were at 140%, and now we reach already 2.5%. With some momentum. But look at what happened in also the summer of 2015. It was also a strong resistance at 250.
So given what you've said, does this mean that the rise in US interest rates will stop?
Well, let's look at the daily charts. And you see that this big rise, even though it's making higher highs and having some bearish divergence, it's still very strong. And so that means basically that at most we got a small range between 250, a small pause between 250 and 220%. So
will this pause, will it impact the US financial sector?
Well, if you look at it, in fact, the answer is no. They are anticipating more rate rise later in the future. And so even though there is some bearish divergence, the fact that it's making higher highs and continue to do so with higher relative strengths just means this sector is outperforming very strongly, will continue to do so.
And last week we saw a sharp decline in the US technology sector. So are we expecting this to continue?
Well, indeed, we had these 2 days, 2 big down days in the technology sector, and that had an impact on the S&P. But as we noticed, we are down at the bottom of the trending range. Oscillators are already oversold and crossing back up, and we already catch up 50% of the whole decline. So probably the down move is over there.
And you mentioned the S&P 500 there. So are you expecting the US S&P 500 to resume a rise after this?
You see, here we see the impact of last week's decline in technology. We see that small pullback. In fact, a pullback only to the previous highs we got in September, around 2190. And yesterday night, already we are back to the previous high. So that means that with the momentum crossing up again, that we are going to move upwards. And if we look at weekly charts to get some perspective more longer term, we should remember that this up move and breaking to new highs open targets with 2300 and 2450. So we still have a lot of room on the upside. And also we see that there is no warning signal on the momentum more medium term. So it will continue.
And in regards to Japan now, so are you bullish on Japan at the moment?
Let's see, Japan has been outperforming the S&P for already 6 months. We see here the rising, in black dotted line, rising relative strength versus the S&P 500. We also see something which impacted quite a lot the Nikkei, which is a decline of the yen. The yen is bottoming a little bit. The move already happened. We moved above the 18,000 already. We are almost at 19,000. Momentum is a little bit overbought. It's still an uptrend, but it could pause any time. That would be normal before the rise continue.
And there's been quite a struggle in emerging market equities. So are you expecting this to also continue?
The struggle in emerging market has been occurring already, for the example of China, for a long time, already since the beginning of September. And if we look at the oscillators, we can say that from September to November, probably most of the correction is done. Now the momentum has crossed back up. That means there is a rebound ongoing. It has not given full bullish signals by moving above the cloud, at least in the S&P, but the relative strength versus the S&P for China is bottoming, and it's also a little bit overperforming other emerging markets. So maybe we could look at Brazil. And Brazil is a bit different situation. It seemed during the course of 2015 that Brazil was outperforming. Relative strength was rising very nicely against other emerging markets and against the S&P 500. Now, recently, it's just kind of bottoming, and we hope that it will remains above the support at 31 level. It's quite a strange because basically Brazil should benefit more given oil prices are rising. But, there is some divergence between emerging markets.
Fantastic. And finally, Bruno, can you wrap up what's been happening in Europe?
Europe is a big surprise in the last 2 days. We have been saying for many months that Europe is underperforming the US, and that was a dog. And suddenly, in the last 2 days after the Italian referendum, Europe wakes up, go from the bottom of the range to almost the top of the range, and could break up the 3,100 resistance levels. Momentum is also rising. So it's probably something to monitor in the coming weeks until year end, and that could complete the bullish picture we have so far.
Well, thank you so much for joining us once again, Bruno.
You're welcome.
Well, that's all from myself and Bruno, but we'll be joining us in the new year, so see you then.